Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, March 25th, 2021. What we'll cover in this video, we'll start out with the equity markets as usual, cover the major stock indexes, definitely some developments worth noting there. Had a couple requests for an update on biotechs. I mentioned XBI as a trade idea in the last week or so. I also hit on semis a little bit before that, so I'll do an update there. As well as the VIX. Those are all kind of related, the indexes, and then some of the sectors within the S&P 500, or subsectors, if you will. You know, the healthcare sector is one within the S&P 500, so then you have biotechs within that sector. Tech is the big sector there, and then within that you have the semiconductors as a subsector. We'll hit a quick update on crude, natural gas, wheat, soybeans, and lumber. I want to do updates on all those. In roughly that order. So let's start out with the markets. What are we looking at today? As posted this morning, the Qs are on that key 310-ish level right there, the yellow line. Remember that defined the bottom of this trading range here, and then again this trading range here. So there's a box right there. Trading range 1, trading range 1, trading range 2 right here, and we're cracking below it right now. So we did have that last hurrah so far today. You can see where we are right here. This is where we hit the gap down to the bottom of the range, the support 310-ish level, rallied up and then broke it. So we're at a pretty important juncture. This is a breakdown. It is a sell signal. I do think we'll go lower, but I'll have to caution this is intraday. That's when you're using a daily chart. The most important thing is how the candle closes a day. So you can get a stick save. A stick save is when security breaks down and only to rally up back onto or back above support before the day closes. I'm still leaning for more downside. As I said, I think this will be the last check of that level. We'll see. But as of now, as I'm doing the video, we're slightly below it. We're at 309. I had that support around 310. And again, you want to see, as I like to say on a breakdown, the redder the better. You want to see the Qs get well below that level. And I'll tell you, it should probably just take a break at today's lows, and that's what I think we'll have. Another thrust down. Take out today's lows, and then you should have a pretty swift move down to my next target there. Well, actually, that target was already hit, the 297 target, but another run down to 297, and then ultimately down to 283. Reversal there to park the week or the day on or around those 200-day moving averages. Again, sort of a micro call, but that's the what I've been looking for. So boom, maybe get a reaction there, maybe not, because again we already hit it once, so we don't necessarily have to have another reaction. Come on down through there, slice through the 200s, maybe a little hiccup there or not. Buy programs may fire off when we hit there, but if there's a lot of downside momentum, probably take us that 283 target and then bounce. So that's the next downside swing target on the QQQ, and if it's hit, you're talking about another 8% down in the market. All right, next up would be, and let me just hit 60-minute charts while we're here. So right now, coming up on oversold, but we don't have any divergence on this 60-minute time frame of QQQ. I'll stick with the same security. We'll look at NQ. We do have some potential divergence. It's worth noting here. So if we get that stick save, what it's going to do is this will be a false breakdown or whipsaw signal. I have that support, pretty good support, about 12,704, which is now broken. And so, take it on face value. That's a breakdown. There's divergence, but it's only potential divergence. Starting to about get burned through. If we go any lower here, the RSI divergence will be taken out. And same thing if we get another thrust down, this divergence here. So you just have to stay flexible. If they ramp it up and you see a late day rally, you're back above here. The buy programs fire off, and we could put in a divergent low and take us all the way back up to 13,342, maybe beyond. It's not what I favor. I already showed you, my preferred scenario. But again, if you are short and you're, of the same mindset, just respect a solid recovery back above 12,704, as well as the bottom of that trading range in QQQ that I just covered. Okay, so those are the Qs, meaning the NASDAQ 100 trading proxies, QQQ and NQ futures. Next up would be the S&P 500, certainly worth noting there as well. This is the broad market. It's been resilient lately. Here's our 60-minute chart. Took out 388.50, which is a support level I had, and I think it's going to come on down, hit at least to this trend line right here. and or that 374-ish level right below it, support. Let me put that number up and round it off. Everybody likes round numbers. There it is, 374. Daily chart, here's what it looks like. 387.81 was a level I was watching, waiting for the next sell signal, and that's what we have today. We're down below it. So again, unless we recover that level, you probably can't make it out there, but I have the 50-day exponential moving average right here where I'm highlighting. There's a yellow line there, and it's done a great job. Every pullback to the 50-day has been bought up lately. It's acted as support. There was an intraday break, closed right back on it, rally, and we're there now. So I do want to point out we broke the 387.81 level, but we're on the 50-day right now. And again, that's the 50-day exponential moving average. I expect it to go, but it's anybody's game. If the bulls can rally back up, stick save, get us back above 388 or so, there's potential for a rally there or to foil this breakdown. However, I think we'll take it out. And once the 50 days clearly in the rearview mirror, that should open the door for a move down to 370.45. So that's how it looks on SPY, as I already showed you the 60-minute chart. And then for you ES traders, ES or the S&P 500 E-mini futures, we hit support and we've held it so far. I have a support level at 38.47.80. We can call that 38.48 if you want. Pretty good support. You can see a lot of reactions along that level there are enough to give it a support level, decent support. But I expect it to go, and if it does, 37.78-ish. Not hard. That's not a hard support level, but just a rough target. Again, you want to look at the charts of SPY, look at the charts of QQQ, and watch and wait and see. When they all hit or approach support around the same time, that's when you usually get your reactions. And of course, if we get some type of real impulsive selling, we can smash through some of the nearby support levels. IWM continues to outperform to the downside, as I've been expecting over the last week or so. Another red day, nothing but red sticks so far. 1, 2, 3, 4 in a row so far. Not down big today, and still a little shy of my target there, 205, as well as the uptrend line off the March lows. So favor a little more downside there. Based on this daily chart, we took out this 215.80 support today. It was decent support. You can see right here it was resistance, then support, little whipsaw down through. I think I covered it yesterday. So that opened the door for this move down. Roughly to that, we're down to that reaction low, but I still think we'll probably come on down. Next support where we should see a reaction, or at least where a reaction is likely, is about 204.90 right there. On IWM. So if we get another jog down today, that's probably where we'll see at least some buyers step in. And then RTY, your small cap futures, we do have potential divergence there. So these are things we have to look out for. This is positive divergence, and should it play out, we're at that previous reaction low. Buyers may step in. I mean, they've already stepped in here. You can see that. But I already shared my thoughts. I'm putting a higher weighting on the daily chart now. You're going to get these little snapback rallies in a downtrend, and so I still favor a little more downside till we hit those targets on IWM, and that's when I think it might be a good time to book profits on a small cap short and or reverse and go long for a bounce. And of course, depends on what the large caps are doing at the time as well. Next up, XBI, biotech sector ETF. Right on. Remember, we hit the red line here is the 200-day exponential. We hit it. The buyers stepped in, as they often do. But we went back down, and we just took it out. We're slightly below it today. I think you can make it out in the video. The red line right here where my crosshairs are. Just below that is a 200-day simple moving average. But more important than that is, a couple things before I leave this time frame. We have we're below this yellow line, which denotes a bearish trend. Once that signal line, the white line on the PPO, crosses down below, and it has been. Typically, it tells you you're in a the primary trend right now is bearish. And obviously you can see it from here. There it is. But again, that trend indicator helps confirm. But there's support at the 200. But if we get another thrust down the market, which I'm leaning towards, we'll probably undercut those 200-day moving averages, hit that 122.43 target. And well, here's the thing: if that happens, let me loop back over to what I shared the other day. I listed XBI as a trade setup. Shorting a potential formation of a right shoulder. I can now remove that question mark. The pattern's complete. So the other day I pointed out we had a left shoulder, head, right shoulder, and we were right about here. And I said you can short, short biotechs here with a stop somewhat above the, top of the shoulder, and ride it down. And that's what we've done now. We're at the neckline. So at this point in time, I removed the question mark because this is a head and shoulders topping pattern. Now it's yet to be triggered. I mean, you might say, well, Randy, we're below that, just a hair below. I undercut that candle. You want to see an impulsive breakdown, and usually you do get one last reaction on the final tag of the neckline, because the neckline support. It's a trend line that gives you support, and you have the 200s right there. So here's the thing: if we take out those 200s, the 200-day moving averages, a simple or the exponential where we're at right now, which comes in right with the neckline, we take out the simple moving average. If you get a big red candle, impulsive selling during the day, especially a solid close, that would then trigger this. And again, I gave you a target here. That's the measured target for the head and shoulders pattern, which is simply the distance from the head down to the neckline. You take a line there, drag that line or replicate it, duplicate it, and add it to the bottom of the pattern where it breaks down. And that's assuming a breakdown here. And again, usually you will break down soon after. However, I showed you before, I believe that my target would be a little bit above that. We have support at 122.43 and then support down at 108.06. So here's what the neckline would look like here. There's your neckline. Yeah, and we can actually draw it like this if we wanted to and say we're not there yet. So that would be actually, if we took it out and I'd do the neckline like this, coming off that low, we have then taken out the 200s and you've taken out this 123.40-ish support. That would probably give us then, I think, a thrust down to at least 108 right there. So there's your swing target. Any way you slice or dice it, if you believe we have another leg down, that 8+% in the broad markets I'm calling for, then I think this will play out that way, and you'll see XBI called down to about 108. You can use, if you don't short, but you want to short, maybe it's an IRA account or you have a cash account, you can use LABD. It's the 3-time bearish biotech ETF, and I think I might have shared this chart already. It's already broken out. Remember, biotech's topped back here, and you had positive divergence on this chart right there, a breakout, and it's been moving higher. And this would be a potential longer term swing target, although I put a much higher weighting on XBI. That is the non-leverage. It's the same index, but with LABD, because it's 3 times leverage, especially in a volatile sector, you get price decay. So don't put as much faith into the charts what happened back here, because over time, again, you get decay. So you want to use XBI primarily as your charting vehicle for entries and exits, even if you're using these leverage ETFs. That's what I like to do. All right, next up would be the semis, SOXX. That's SOXX Semiconductor ETF. I had pointed out this primary trend line off the March lows, and this is a common theme in a lot of my analysis. Many sectors and indexes, SPY, QQQ, broken below the trend line off the March lows. IWM has yet to do so, but it's coming up on that. The semis put in a divergent high right here, just like they did back there before this big drop. That drop was the COVID lows, I call it, the March lows. 38% drop in the semis, but here it's just very clean. It's a clean trend line, clean breakdown, impulsive, everything you want to see, a perfect back test, and so far starting to move lower. So this would indicate a move down. We reversed a little shy of my 366 target. Again, let's make that a round number. Let's brighten it up so you can see it well in the video, and call 365.96, make that 366. That would be your first target. It's a drop of about, from where we're at right now, about 7% of hit, and that roughly meshes with that 8% or so in the market that I think we might get. If that gets taken out, that opens the door for a move down to 331, and that would be about a 16% drop from where we're at. So, first things first, let's see how today's breakdowns, if they stick, if they're regained, and if they are, what happens going forward tomorrow. So those are the that's pretty much the indexes. Let's look at crude oil for you. Crude CL, crude futures back down to that third target right there, 57.25, which was already hit once, and we're back down to it. It is support, so the buyers are likely to step in, but we already tagged it once, and I think whether or not we break down and head on to that next potential target at 54 will likely depend on what the market does here. Again, I just showed you we're just a hair below support on SPY and QQQ, but not by a wide margin. And so far, the buying since we broke down hasn't been impulsive. The buyers are stepping in here, and so we could bounce in crude. In other words, time to maybe, if you came into the day short, it's been a nice drop today. Crude's down still 5.36%. Either take some profits, book full partial profits on a short, or even go long for a bounce off that level unless you see it go. You might get a bounce. Where to? Well, 58.85 would be your first resistance. And again, you kind of have to play that one, as things develop, depending on what the indexes do. If the indexes take another leg down, take out today's lows, crude will likely break down as well, and that'll open the door there. So I do think we're going to go there, and I said that yesterday, I believe. It's just a matter, do we bounce first and then do it, or do we take that out today? Wouldn't surprise me to see that happen today. Usually during corrections like to catch longs off guard, and also not let in shorts that wait too long. So they tend to, at a certain point, they start out, kind of gradual, and then they start to snowball. So we could easily see that today, dump, just as this rally off support starts to look like it's getting some traction, boom, sellers could step in and give us that other leg down. So like I said, you just have to be nimble. If you're going to play a counter trend bounce, fine. Just keep an eye on everything. Keep an eye on the indexes, and don't let it get away from you if you do. And wheat just fell apart. We had that rally, the potential, a bull trap or bear trap right there. After the breakdown of 627, 645 right there, nice support. Fell back down, gave up, couldn't hold the 627, 645 on the pullback, and then when we took out those lows, that was it. Because these were your recent reaction lows right there, right about at 620, and so that was taken out. I had wheat, I got stopped out, but fortunately it's being offset by a decent short trade. I also mentioned soybeans as one of my favorites the other day in the video, and that's ZS. If I can find ZS for you, let's see, I've got a lot of charts down here. Somewhere I have ZS. Let me pause the video and find that one. Okay, there it is. Now keep in mind, this ZS chart zoomed out to 2-hour candles. So instead of 60 minutes, they're 120 minutes, and it's a 6 month, so it doesn't look as much because we're zoomed out to a longer scale or longer time frame. But there it is, that beautiful bearish rising wedge, negative divergence, breakdown, and starting to roll over. So that's the story. Most ag commodities are coming under pressure right now. ZS moving down, still maintain at least that 1384 first target, and potentially all the way right down here to open to a swing down to about 1300. We might get it. Remember, the primary trend is bullish. I'm still longer term bullish on commodities, but they had a heck of a run, and nothing goes straight up, so I'm looking for a correction within an ongoing bull market there. And then same thing with corn. Within wheat and corn, they tend to move together quite often. And corn was so far highlighted this trading range that we've been in for a while, the top of the range right there, and so far rejected off the top of the range. Corn failed to break out, move down, and it's flirting right now with that 546, 176 support. If that goes, then probably go back down to the bottom of the range at 528, 819. And if we can hold it, again, we're just bouncing around between support and resistance there on corn. And then finally, lumber. Lumber is still very much on my radar. I think there's if and when we get another decent leg down in the market, in other words, that 8% or so, if that happens, if we can break today's lows, then I think just like crude finally started to come under pressure once the NASDAQ began correcting, I think we'll see the same thing with lumber. So this is a 6-month chart. There's your divergence been building. We had negative divergence here. We had a healthy correction, took us down to that 779 support. Bounce there, moving up. So if we break the trend line, and that's, again, I think it'll depend largely on what the stock market does, because if the market's rallying, the S&P holds up, it is indicative of future growth. Everything's good in the economy. But if the S&P rolls over and corrects, then it'll be implied that that's going to put pressure on the housing market, and therefore lumber demand for lumber may go down, and that would be your target. First target 779 and change. Second potential target there 698.35 right there. And this is what lumber looks like on a long-term chart. These are lumber futures here. Let me change the color on this tool. You can see lumber, it'll often go up in these uptrend lines, but then every now and then it starts going parabolic, and parabolic runs never end well. There's a parabolic move, there's a breakdown of the parabola, and sharp, very powerful correction. That ended with positive divergence. See the big divergence down there, and set up the stage for this rally. Nice rally there. Had another correction right here, trendline break. And that was also the shutdowns there. That was the drop in the March lows when just about everything fell when COVID hit. And then since then, two parabolic advances. We had this one here, parabolic run. Once the trend line broke, the parabolic trend line, boom, sharp drop. Set up a regular trend line there, breakdown, small divergent high, correction, and another run up. And this forms another parabola, which is broken since. And I gave you levels on the shorter term chart. And a big one will be, I think, if this 825-ish level goes, that would most likely seal the deal, and then you'll probably have a very sharp correction there. So that's lumber, a lot of potential, tends to fall pretty big after the parabolic runs. And so far it's holding up, but again, nothing goes straight down. Back here you had a breakdown, and then you had a period of consolidation right around here before the next leg down. Alright, that's everything I wanted to cover in this video. Let's wrap it up here and see how the indexes handle these support levels that they're currently flirting with. And I'll pick it up later today. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.